Welcome to The Explainer. Let's just dive right in. If you've ever stared at a fast-moving financial market, it's kind of like staring into a blizzard. There is so much noise, so much data, and honestly, so much emotion flying around. Well, today we're unpacking a highly structured, incredibly mechanical approach to taming that exact chaos. We're looking at a strict, rule-based blueprint called the 5 and 20 EMA Scalping System. This isn't about gut feelings, and it's definitely not about guessing where the market's going to go. It's about stripping out the emotion entirely and following a rigid set of conditions derived straight from our source material. So here's a question for you. How do you actually find order in the sheer chaos of a 3-minute chart? When prices are violently ticking up and down every few seconds, human instinct is basically to panic or get overly greedy. But the answer to this question isn't to try and outsmart the chaos, it's to apply a systematic, rule-based solution that acts as your anchor. We need a filter that tells us exactly when to act, and honestly, just as importantly, when to sit on our hands.
And that brings us to our magic number, 3. 3 minutes is the exclusive time frame for this entire strategy. We're not looking at hourly charts, and we're sure not looking at daily charts. This system is laser-focused on the 3-minute time frame. Now, this tiny window implies intense focus for you as the operator. A 3-minute window requires rapid, disciplined execution. You really don't have time to second-guess yourself. You have exactly 3 minutes per candle to evaluate if your rules are met.
Here is our roadmap for mastering this rapid-fire environment. Number 1, the 3-minute scalping framework. 2, executing the buy setup. 3, executing the sell setup. And 4, strict risk and reward targets.
All right, Section 1, the 3-minute scalping framework, the blueprint for scalping.
Okay, before we even think about pulling the trigger on a trade, we've got to set up our workspace with the precise tools required. No cluttered charts, no dozens of overlapping lines. We literally just need 3 core indicators, the 5 EMA, the 20 EMA, and the VWAP. The EMA stands for Exponential Moving Average, meaning we're looking at the 5-period and 20-period moving averages that place more weight on recent price data. And the VWAP? That's the volume-weighted average price. Think of these 3 indicators as your essential visual tools. They're going to filter out the market noise and give you a crystal-clear lens through which to view that 3-minute time frame. If it's not one of these 3 lines or the price itself, it simply doesn't matter to this system.
Moving on to Section 2, executing the buy setup. The bullish trigger. Now we're getting into the precise anatomy of a perfect bullish trade. And remember, all these conditions have to align perfectly. Close enough is just not good enough here. Let's walk through the chronological checklist. Step 1, you need to see the faster-moving 5 EMA cross above the slower-moving 20 EMA. That is your first sign of bullish momentum. But we don't act yet. We move to Step 2, the price must be trading above the VWAP. This basically confirms that the broader intraday volume and price trend actually support a move higher. Step 3 is where the extreme patience comes in. A strong bullish or green candle must close above both EMAs. You have to wait for that 3-minute candle to actually finish forming. And finally, Step 4, you enter on the very next candle. You don't jump the gun, you wait for the checklist to complete entirely in order. The absolute most crucial point in this entire setup is patience. You literally have to wait for that strong green candle to close. In a 3-minute window, a candle can look incredibly strong at minute 1 and then just completely collapse by minute 3. If you enter before the close, you're just guessing. You're not following the system. Emotion has to be completely stripped away while you wait for that confirmed close above both of those exponential moving averages. That close is the ultimate validation of your setup.
See how this builds a broader logic? We just looked at the bullish side, where the 5 EMA crosses above the 20 EMA. But the beauty of a truly mechanical system like this is its perfect symmetry. If the market reverses, our rules simply reverse with it, which leads us right to the exact opposite scenario, when the 5 EMA crosses below the 20 EMA.
Which brings us to Section 3, executing the sell setup, the bearish trigger. If you caught the logic of the buy setup, you've pretty much got this nailed down already. We're simply reversing the triggers to capitalize on downward momentum. Let's look at the bearish steps, which perfectly mirror our previous rules just upside down. Step 1, the 5 EMA crosses below the 20 EMA. Step 2, price is now trading below the VWAP, which confirms that downward pressure. Step 3, we wait for a strong bearish red candle to officially close below both EMAs. And Step 4, we enter on the next candle. It's the exact same strict set and structure, just flipped for a selling environment. This symmetry is absolutely fantastic for building muscle memory and rapid recall when you're in the heat of a live market.
And the second that strong red candle closes, boom, you enter on the next candle. Swift automatic execution is required the exact moment that next candle opens. No hesitation at all. The setup has been confirmed by the close, the indicators are aligned, the price is below VWAP, so you execute.
Let's wrap things up with Section 4, Strict Risk and Reward Targets, the exit strategy. Look, getting into the trade is really only half the battle, right? The final and arguably most critical phase is protecting your capital. The system's exit strategy is completely rigid. Let's contrast the setups here. For a buy setup, your stop loss goes either below the 20 EMA or below the previous swing low, meaning the most recent valley where the price bounced back up. For a sell setup, it goes above the 20 EMA or the previous swing high, the most recent peak where the price reversed downwards. But notice how the target points remain completely uniform regardless of the direction. You're always aiming for 10 to 20 points or a 1-to-2 risk-reward ratio. The system leaves absolutely no room for ambiguity about where you get out if you're wrong and where you take profit if you're right. Notice the distinct choice you have for your defense here. You've got a structural option and an indicator-based option. Placing your stop loss at the swing high or low means you're using the actual price structure of the chart to protect yourself. Placing it at the 20 EMA means you're trusting the mathematical moving average to act as your dynamic line in the sand. Both are totally valid within the system, but you must decide which rule you're following before you ever enter the trade.
Looking at the profit side of things, we hit this absolutely critical concept, the 1-to-2 risk-reward ratio. This is a mathematical target parameter where your potential reward is aimed precisely at double the risk established by your stop loss. This is the true mathematical edge behind the strategy. Think about it. If your stop loss puts 5 points of capital at risk, your target is locked in at 10 points of profit. You really don't need to win every single trade if your winners are mathematically outpacing your losers.
So, summarizing these profit targets, the system basically demands rigid discipline in one of two ways. You can set a static target to secure 10 to 20 points directly, or you can dynamically aim for that 1-to-2 risk-reward based on wherever your stop loss is placed. But you cannot change your mind halfway through the 3-minute candle just because you get scared or greedy. You pick your target rule, and you let the system work.
So, there we have it. We've covered the framework, the buy setups, the sell setups, and those incredibly strict risk parameters. The 5 and 20 EMA scalping system is laid out clearly right in front of you. The rules are undeniably simple, but I'm going to leave you with this provocative thought. Do you actually have the discipline to follow them? Because ultimately, the gap between knowing a structured system and executing it flawlessly in a 3-minute window without emotion, well, that's where the real work begins. Thanks for joining me for this explainer, and I will see you next time.